Good morning and welcome to Viscofan first half 2017 results. Here with me is Mr. Canales, CEO of Viscofan Group. Before I start, let me remind you that this document may include statements about intention, expectations, or forecast of the company, additional to the mandatory financial reporting whose sole purpose is to provide information more accurately about the perspective of future behaviors. Such intention, expectation, or forecast do not constitute any guarantees of compliance and involve risk, uncertainties, and other relevant factors that could cause actual developments and results to differ materially from those stated in such forward-looking statements. This circumstance must be taken into account mainly for all persons or entities that may have to take decisions, develop, or spread opinions relative to value is set by the company, and particularly by analysts and investors that handle this document. The financial statements contained in this document have been prepared under international financial reporting standards. These financial statements have been audited and consequently susceptible to potential future modification. Now I hand over the presentation to Mr. Canales.
Good morning and welcome once again to the presentation of Viscofan Group's financial results for the first half of this year 2017. As we reported in our annual presentation a few months ago, 2017 is a year of growth for the market and for Viscofan. The market has resumed a more normalized performance. In this context, Viscofan is very well positioned to capture this market growth, which is indeed what has happened in the first half of the year. We have achieved double-digit growth from top line to the bottom line. Growth has also taken place in the second quarter. Revenue totaled 196 million euros and recurring EBITDA reached 56 million euros, to which we must add the collection of the compensation for the fire that affected a spare parts warehouse in Germany last November. This incident has been valued at 14 million euros, which after deducting expenses for inventories, cleaning, rubble clearance and other items, has generated 6 million euros in non-recurring profit that will be used to invest in a new building. Thus, EBITDA for the quarter was 62 million euros, making for an accumulated EBITDA of 117 million, up 16% from 2016, and a net profit of 66 million euros, up 10.5% from June last year. Analyzing the revenues, we see all of the components make a positive contribution. On a like-for-like basis, that's within the same scope of consolidation and excluding the exchange rate, casing sales grew by 3% year-on-year. All of our families have grown in volumes, especially collagen, fibrous and plastics, with cellulose casings experiences lower growth mainly due to the situation in the market in the United States. Revenue for cogeneration is slightly higher than last year, representing a contribution of 0.2 points to the annual growth. Currencies are also positively affecting revenue, approximately 8 million euros or 2 additional points, mainly due to the appreciation of the Brazilian real. Lastly, I would like to point out the good performance of the sales coming from Vector companies, which in 6 months have generated more than 15 million euros in revenues from plastics, or in other words, have contributed 4 growth points to the revenue, proving that the acquisition of these companies was the right decision for Viscofan and its shareholders. All of the families have grown, as have all of the reporting areas, with Latin America standing out especially, where we reached 60 million euros of sales, up 27% from the first half of last year, and 13% on a like-for-like basis. Thanks, of course, to the recovery of the Brazilian market following the negative performance of this market last year. In North America, revenue came to 121 million euros, up 11%. This growth is very positive if we take into account the difficulties for growth in this market, where the local presence of Vector is also helping us to improve our sales volume of plastics in this region. Like-for-like terms, sales in North America are flat compared to last year. In Europe and Asia, growth was at 4%, with a revenue of 209 million euros, and a growth of 2% on a like-for-like basis. Once more, Asian continent is the region with the greatest potential for growth, although it also requires high levels of competitiveness in order to make satisfactory commercial proposals, both for customers and for casing producers. Thus, we have experienced 3 quarters of consecutive growth, and we have reached a new historic high for quarterly revenue with 196 million euros, up 7% from last year. By revenue nature, cogeneration contributed 10.5 million euros, whereas casing sales accounted for 185 million euros. Comparison was more demanding than in the first quarter of the year, as reflected in the 1.3% growth in like-for-like terms. Revenue growth coupled with cost control, production improvements in a year of intense activity. Diversification of suppliers in recent years, a context of some stability in the cost of raw materials, and an improvement in production speed and efficiencies have reduced our production costs, increasing our gross margin by 1.5 points. Level of savings sufficient to compensate the increases in staff, mainly in Spain, Serbia and Mexico, linked to capacity expansion projects, which has led personnel costs to increase by 14%, up to 93 million euros. The increase in other operating expenses is mainly due to the higher energy costs, which grew by 16% year-on-year, and also to higher plant expenses in Germany associated to the fire in last November. Depreciation has increased significantly by 16% due to the investments on new machinery and equipment and buildings over these years. Thus, operating profit also grew by 16% on a year-on-year basis, up to more than 88 million euros. Analyzing the EBITDA contribution, we can see that growth has been led by the volumes of casings on a like-for-like basis, almost 5 points, followed by the exchange rates, which contribute 3 points to the growth, and lastly the performance of Vector, which has generated 2 million euros of EBITDA, what equals 2 additional growth points. This led to a recurring EBITDA of 111 million euros, which once we include the non-recurring result due to the net cash inflow of 6 million euros, totalized 117 million euros of consolidated EBITDA in this first half of the year. This level of profit encouraged us to be optimistic for the 2017 results of the group. As seen in the figure, the improvement of the revenue is also coupled with historic high in the quarterly EBITDA, which in recurring terms has totaled 56 million euros and in reported terms 62 million euros. 3.7% like-for-like growth and a 20% year-on-year growth. In short, growth is being attained without sacrificing margins. Recurring margin for the quarter is 28.6%. That means 0.4 points more than in the second quarter of last year. Year to date, margins are practically flat for the year, just an increase of 0.1 points on a year-on-year basis, although on a like-for-like basis the improvement is a significant half-a point growth. Although currencies have partly supported the operating income, it's also true that the negative impact on the financial results due to exchange differences has been more than 6 million euros compared to the previous financial year. Effective tax rate is around 20%, generating tax expenses of 17 million euros, and thus the net profit year to date has totaled 66.2 million euros, or 62 million euros excluding the non-recurring profit. That's to say, net profit is up 10.5% on a year-on-year basis. These are very solid results that allow us to deploy our More to Be strategy, in the knowledge that we are building a more solid company and thus strengthening our positioning for the future. Of course, it's not easy. We are in the midst of intense operational activity, combining market demands with projects that will change the profile of the Viscofan Group. The key project is the construction of the new plant in Cáseda, Navarra, where fibrous technology will be installed. The works are making good progress. There are plans to carry out production tests in September, just around the corner, and if everything continues to go as planned, we will be producing casings for the market in the last quarter of this year. But this is not our only project. We are also working on expanding our collagen capacity in Serbia and China, as well as implementing new converting technology in Brazil, among other initiatives worldwide. Aside from the casing business, I would like to point out that in Germany we have opened a clean room for bioengineering development, where, as you know, we are involved in different projects. Although these are making good progress, they are not expected to yield significant results in the very short term. These are all ambitious projects with an investment of more than 85 million euros for the year, which are financed mainly with our operating cash flow, without renouncing to increasing our shareholder remuneration, as we have been doing in recent years. At close of this period, the net bank debt is at the level of 19 million euros, having invested so far in the year 52 million euros, and having paid the final dividend in June with more than 40 million euros. Finally, these results show growth in the main financial figures, boosted by the volumes in all technologies, with a growing market, where Vector is also contributing to strengthening our global leadership position. Very healthy growth, which is coupled with an improvement in profitability, increasing our margins. These results confirm that we are going in the right direction in order to achieve the ambitious targets that we established for the year, without compromising the company's risk profile to seek new opportunities for growth wherever available, because they do exist thanks to a market that has shown a solid outlook for growth in the medium and long term. Thanks very much for your attention.